Hello once again, everyone. This is Rich again with High Percent Trading. We're going to do some follow-up on a second part of a video today from the Euro currency trading on November 14th, 2013. Before we do that, let's just get our standard disclaimer out of the way. As everybody knows, everything we say and do here at High Percent Trading is for educational purposes only. Futures trading, forex trading, any type of financial trading always involves the element of risk, and therefore you should only be trading with capital, that is risk capital, that you can afford to lose. Nothing we say or do here in any of these presentations, in any of the webinars, videos, materials, media, indicators, or strategies shown or provided should ever be construed as trading or investment advice. And as always, any and all trades that you do take are always taken at your sole risk and discretion. That being said, here's the chart again from the Euro currency. This is from November 14th, 2013. We already showed how to trade earlier in an earlier video these high energy times from today. Now I'm going to show how you can patiently sit and wait and trade retrace trades with the trend. Quite simply, the setup is going to be as follows. Using an indicator that determines your trend, and in this case I'm using an indicator that we have here called the dynamic trend. When this indicator is red, like this, or a magenta color, the trend is down. When the indicator is green or blue, the trend is up. And therefore, we're trading long trades only. And when the indicator goes yellow, we can expect chop. We can trade both sides of the chop. And when the indicator goes magenta, like not magenta, but rather coral, we can also trade both sides because that's chop. So quite simply, what we're waiting for, the trend is down. We're waiting for the market to retrace at or above the mid-band in the case of a short, which is right here. We're waiting for a setup in this indicator called the outer limits, which is red, and as soon as we get that and we get a reversal bar, we go short. So this is a short trade here. We try to scalp, as I indicated, about 7 to 8 to 9 ticks. Once you do that, go to break even on a runner. It's best if you can trade 2 contracts. Now we pulled back up again above the midband, and you'll notice what's going on. Although we didn't quite get an outer limit set up, we do have what's called divergence, and this is a very good divergence indicator. Some of you have other indicators that you use for divergence. This one is called the profit indicator. It's showing strong divergence right here. So again, you can go ahead and re-enter this trade. You're also seeing some divergence here in the outer limits. You re-enter the trade again for a nice scalp. 7 to 8 to 9 ticks going to break even. Now we move above the midband again one more time. We have another setup in the outer limits. We go short, same scalp, 7 to 10 ticks. Move back up to break even. You'll notice again as we moved higher and we moved into this area, which is called the phantom area, we're having very marked divergence. Again, you take the short, right? Nice trade down. As I indicated, now our midband turned this coral color, indicating that we're in chop, and if we want, we can trade both sides of the chop. So under the same principle, we're waiting for price to come down at or below the midband with a nice outer limit setup. We go long. You notice you even had a little bit of divergence down here, which is kind of icing on the cake. You're going long. We move up. We have a nice arrow to take profits with. Also, this is a short trade. We're coming off of chop again, so we can go short here. Very nice profits all the way down. Now, because the trend has changed to green, we're in an uptrend, we're looking at trading only with the trend. This is one of those trades that you come down, you patiently take the trade. You really didn't have enough in this trade to get you 7, 8, 9 ticks on a scalp, and that's why you have to use stops, because not every trade is going to work out, right? If you look at these percentages, these trades, these types of setups that I'm showing you right now are about 85% accurate, but of course you've got the other 15% that it doesn't work, so therefore you use a stop, and your stop will be right under here. So we tried to get the scalp, we couldn't get it. You get stopped out. However, we're still staying with the trend. We have another setup. We move down with the outer limits. We go long. This was a very nice trade to the long side. Again, if you can do in multiples of 2, you're going to scalp one, try to go to break even on the other, and either take profits up here, or if you keep a runner, go further. So that's the trade. We moved higher. Again, we're looking for the same setup. This time we're pulling into the mid-band below it, which is here. So you're sitting patiently waiting for the trade to come down. We hit the mid-band. You get the setup. You take the trade off the trigger. Again, scalp one. Try to go to break even on a runner. We came down one more time to here. This is called the phantom area. It's called the phantom because prices generally don't stay there very long. You notice now we went to yellow, which is chop. We can trade both sides of the market. This is a long trade. You had the setup. You had divergence. You had everything working for you. A very nice long trade here. And if you're in this runner, this trade's got about 18 ticks in it. Again, any good trading system has to have discipline and patience. And I think you can see you know exactly where and when to take these trade setups. Again, to recap, you have the patience and discipline to sit and wait. You're in a downtrend. You're waiting for price to get at or above the mid-band. You're looking for your setup here, short. Setup here, short again on divergence. Setup here, short with the arrow. Setup here again, short with divergence and with the phantom. Now you've gone to chop, sideways. It's alerted you the trend is sideways. You can trade both sides, long here, short here, long here, and this trade didn't work out. Long again down here. This was a beautiful trade. Didn't quite get down to here again. This is not a short trade up here because the trend is up. We're not in chop. We pulled back. Another nice long entry, and then pull back again one more time, another nice long entry. So again, being patient, waiting for the market to come to you as far as opposed to you chasing the market. How many trades did we have that we had total that we had 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 trades. Of those 10 trades, 9 of them were profitable. This was the only one that didn't work out. So again, trading is all about patience and discipline, and I hope that this really illustrates the point. I want to thank everybody for watching. I hope this was beneficial, and I hope you can incorporate techniques like this into your trading. Thanks for watching. Bye-bye.